A very good morning. Welcome to Chartbusters. The screen is really looking very, very good this morning. You have the Nifty Bank, the mid-cap index, almost all the indices. They're trading with big gains in today's trading session. Just pull that up for you. The Nifty is now up 280 points odd. The initial rise was sold in two, but as the Nifty moved towards that 11,610 odd mark, that dip got rebought, and now you have 1,000 points on the Nifty banks. Things looking splendid. Advanced decline ratio hasn't been looking very, very great at various times in the past week. Pull it up today. 8 stocks gaining for every 1 stock that's declining. Well, Mangalam, that's as good a screen as we've seen in the recent past.
Absolutely, as good a screen as we've seen in the recent past. More importantly, the mid-cap index is now up 600 points, 3.5%. That's telling you that confidence has returned from a frontline perspective as well. If there is support at the lower end, the mid-caps go ahead and do outperform. We will keep an eye out on that. And as our ticker team is telling us, the Nifty is less than 200 points away from the record high. When it happens is the big question. First up, all the top stories, and then we get cracking on all the individual things that we're tracking over the next 30 minutes. Market surges in trade. Exit polls suggest another term for the NDA government. Sensex and the Nifty post gains of over 2% each. The mid-cap index outperforms with a gain of almost 4%.
And bond yields soften post-exit poll verdict. The Nifty Bank outperforms the benchmark indices. Financials like SBI, PNB and Federal Bank, all of them top the list.
The Nifty IT, however, underperforms as the rupee opens stronger. Tech Mahindra amongst the top Nifty losers. Infosys too, down around 1%. TCS trades with a minor cut.
And the market mood fails to lift Dr. Reddy's. The stock is the biggest loser on the Nifty. The margin improvement in Q4 stands out, but North America and India growth comes in below estimates. Jubilant Life to tanks in trade on the back of a weak set of numbers. Nomura downgrades the stock to neutral.
Soba surges in trade on the back of its fourth quarter numbers. Revenues rise 77% with the profit surging 62% sequentially. 787 units sold in the fourth quarter, which is a multi-quarter high.
Wow, the screen is really looking good. We're almost at around 11,700 odd mark. So, even if you bought the initial dip, you'd be making good money. We're up, we're closer towards that 11,700 mark. So keep an eye out on that stock. And large amount of these stocks, from the broader markets as well, are moving higher. BEL has moved to the high point of the day, so keep an eye out on that one. IDBI Bank as well has spiked up. I mean, no use really pulling up any of these individual stocks because by the minute or every 10 minutes you're seeing a new stock is moving up 7-8%.
BEL, Nigel, a public sector company, a lot of people were believing public sectors would do well. Look at Dredging Corp. Suddenly that stock out of nowhere comes in, and Dredging Corp is the one that I'm talking about, 12% higher on that too. So there you have it, up until say 10:30, nothing, and then sudden 12.5% rise there.
Oh wow, big moves is what we're seeing on a whole host of stocks. But how do you trade the Nifty from here? Prakash was quite clear, in Friday's trading session, even the previous trading session, this market needs to be bought into. So congratulations, Prakash.
Thank you.
You have got that call right. But the market watchers are saying, hey Prakash, tell us what's next. What do we do from here?
Soba still looks up. I wouldn't say that maybe the all-time high is there, but 100 to 100, maybe a day or two still looks up to me. So I would say go long as it holds. Jindal Steel certainly looks good to me. Looks like the way it's trading, it can continue its journey up. Target on the upside is 177 to 180 zones. I think it's going there. Only thing is we need to have a deeper stop below 160 and trade long Jindal Steel. I also happen to like M&M. What a massive up move you see. This momentum should continue up. On the upside, target 680. Stop below 640.
All right, a couple of buys from Prakash out there. Prakash, the one sector which has been, so to say, under severe pressure over the last couple of weeks, and not only that, a couple of years as well, is the pharmaceutical index. Now, as we speak, Dr. Reddy is down 5%. A lot of the other stocks also not doing too well. A lot of people are saying that maybe, there is some bad medicine out there. What do you have to say?
Possible. I mean, the doctor needs some medicine itself. The way it's trading, it looks like it can see even more lower levels, perhaps around 2,450 or 480 zones is still a possibility. Such kind of a down move of around 5% down on the day when the market is up, looks like something is wrong seriously. Don't touch it. That's it.
Don't touch it.
No.
So at no point of time you will be looking to buy into it. In fact, will you look at sell it at these levels?
Only thing is, where do you put a stop? Stop is about 2775. It's trading at 2,600. 175 rupees stop. For that, you need to make around 300 rupees profit. I don't see the risk reward ratio favorable
So
here.
don't trade
Keep it away. Don't touch it.
Don't trade it.
Just as we speak, I'm sorry, this one just came on my radar. Bata. It's been a record performance, but over the last few days, the stock's seen a sharp sell-off. Just as we speak, there you have it. And like you said, the market's looking good. Bata, a stock which had outperformed earlier, is now seeing a bit of a sell-off.
Two things against Bata. I think I had given last week a sell on Bata, said Tata to Bata. I do remember that. The up move that we saw was sold into. Again, a next up move is being sold into. So looks like something is wrong there. Like one could seriously trade short Bata, have a stop about today's high, so somewhere closer to 1400 zones, and we perhaps could see lower levels, maybe around 1325, 1330 zones is a possibility. So Bata could be sold into.
Okay, all right, Prakash. Thanks so much for stopping by and giving us all those details. We'll chat in the next couple of hours as well. Well, Dr. Reddy's is not keeping too well. Pull up Oro Pharma as well. That's the other one that's seen a bit of a downtick. Remember, we're talking about a very, very strong market, and suddenly you have a couple of these stocks that are moving lower. That's calling for your attention, so keep an eye out on that one as well. But as the exit poll predict a thumping majority for the Modi government in the 2019 Lok Sabha elections, we spoke to a whole host of market voices on what they make of the current market setup. Let's take a listen in.
I would advise investment positions to be taken 2 days later when we have a clear government. There will be enough opportunities. There will be volatility. I would definitely go into infrastructure-focused stocks because that's one place government realizes there is no other option to be aggressive because private investment and capex will not pick up instantly. Government expenditure will have to sustain. The economy will have to sustain jobs because government is cognizant of the fact that they have to address the job and the immediate economy problem. So which will obviously can only be done in the immediate short term through government expenditure over the next few years or few months, So therefore, cement, steel, some capital goods, these are kind of areas where you need to look at, good buys right now.
Exit polls are a positive surprise versus the opinion polls led anchoring of market expectations. If these get repeated on Thursday, then obviously we are looking at tactical Indian markets doing well, outperforming global markets for sure. In our framework, markets could have upside anywhere between 5 to 10% from current levels.
Looks like it's going to be a good rally ahead of us. From a global portfolio investor standpoint, what we're going to be looking for going ahead is the policies of the government, a continuation of the policies, and also some direction on fiscal policy, which we've been waiting for a while, which is simplification of the tax rules, ease of doing business for foreign investors, hopefully lower corporate taxes, and an increase in spend on infrastructure.